Hey everyone, you may be wondering, why is Bitcoin's price stuck in the mid $90,000? In fact, earlier today it was as low as like $94,000. How is it that the world's most amazing asset, the future monetary system of the world, seems stuck in the mid 90,000? And the answer is, it's actually not stuck. There is a huge amount of activity going on in the background, but it is Bitcoin changing hands rather than Bitcoin, more Bitcoin being acquired. Obviously, if more Bitcoin was being acquired, if there was more buying pressure than selling pressure, the price would go up. If there's more selling pressure than buying pressure, the price would go down. So when the price is relatively static the way it is, the two are somewhat in balance, but that hides the fact that there's a huge turnover in who is holding that Bitcoin. So to understand why, we need to understand the behavior of different kinds of investors. So the least sophisticated investors are called retail investors. These are average people with a Coinbase account that have not done the work to understand what Bitcoin is. They have not done the work to understand how investments work. They have not done the work to understand the asset they own. And those type of investors are the quickest to buy when something is going up and the quickest to sell when something is going down, which means those type of investors typically lose money because they're buying in the euphoria when an asset's going up and they're selling in the sort of fear of a market going down, which tends to be, they buy high and they sell low, which is the opposite of what smart and sophisticated investors do. And the smartest and most sophisticated investors typically just buy and hold. They're not trying to trade the asset. They're just buying and holding. So right before I recorded this video, and as I record this, Bitcoin is about $95,000 per coin, which again is way, way, way up over the last 4 months, but it's relatively the same or in the same range over the last 3 months. So of course, people have a very short attention span. And so if you say, oh, wait, but how does that compare to October of last year, less than 6 months ago? The answer is Bitcoin's up 50%. And for a $2 trillion asset class with very low risk, up 50% is insanely amazing. But again, we're talking about retail investors here that don't have the sophistication to have that point of view. So what is happening right now? Well, what is happening right now is average investors, retail investors, are getting bored. They're getting bored because they see other things that look more exciting to invest in. They see the Trump coin, shoot out of nowhere and now it crashed. They see the Melania coin shoot out of nowhere and then it crashed. They see all these meme coins, which are entirely just stupid stuff, but they shoot up and then, someone somewhere got super rich. Of course, everybody else lost, but it's like winnings in a casino at the lottery. It's like they're always advertising the winners and everybody's, apparently not sophisticated enough to understand that. For every winner, there's like a bunch of losers. In a casino, it's almost all losers. In Bitcoin, if you hold on to it, it's always winners. The problem is not everybody does. So there's a huge rotation happening here between retail investors who are selling and sophisticated Wall Street investors who are buying, which is really a shame because Bitcoin has been the first asset class historically where retail investors could front run Wall Street, meaning they could get to Bitcoin and buy Bitcoin before Wall Street. And what I mean by Wall Street is like the sophisticated investors in New York and Chicago whose full-time business is investing in stuff. When people say Wall Street, that's what they mean. They mean that professional class of investors, hedge funds, money market, not money market, but I guess it'd be hedge funds, it'd be, money managers, it'd be, sort of all the big dogs on Wall Street, which is a street in New York City where a lot of these sort of stuff happens on the NASDAQ and the New York Stock Exchange and all that sort of stuff. So retail investors, average people, are getting bored. They're used to exciting, euphoric runs of random stuff, whether it's meme coins or otherwise. And so when Bitcoin cools off for a little breather, which 100% of assets do that, no asset just shoots for the moon and never stops. Every asset, even the best performing assets of all time, which Bitcoin is the best performing asset of the last 10 years, the others would be things like Amazon, Tesla, Apple, Microsoft, Google, Nvidia, companies like that. All of those, none of them just shoot up and don't stop. They all go through periods where they take a breather, the price has to sort of catch its breath, they go down for a little while, then they start climbing again. So Bitcoin goes through that. Well, in the case of Bitcoin and those other assets, when it takes a breather, people get bored. So right now, people are like, why am I holding Bitcoin? It's just sort of not doing anything. It's sort of bouncing around in the mid 90,000s. It's like you're holding the best performing asset of the last decade here, and it's up 50% in the last 4 months, and people are bored. I mean, it's absolutely ridiculous that people are bored when they're holding an asset that has outperformed every other asset in the last decade and is still up 50% in the last 4 months. And they're like, they sort of tap their watch and they're like, what have you done for me lately? It's like, give it a minute. It is a $2 trillion asset. It doesn't like bounce around like a jackrabbit. And if it did, it'd be an asset that you'd likely lose money on. So anyway, retail investors get bored. And when they get bored, they sell the asset and then they go chase other stupid stuff that moves faster. And of course, they typically lose money doing that, which is why smart and sophisticated people don't do that for the most part. So what are these smart and sophisticated people doing right now? Well, they are buying the Bitcoin from the retail investors who are bored. Or some retail investors who bought Bitcoin when it was significantly cheaper than it is today. It's chilling in the mid 90,000s and they're like, yeah, I've doubled my money. I bought it at 45. Now it's 95. I'll just sell it, which of course is super dumb. Like if you're holding the best performing asset of the last decade and it has, 10x, 20x, 100x upside, depending on who you ask. Michael Saylor would say more than 130x upside left to go. That's 13,000% left to go. With those sort of huge future upsides, it's absolutely ridiculous to sell an asset that you're only up 2x on. So, I mean, I was talking to somebody one time and they had bought Bitcoin when it was $5,000 a coin and sold it at 20,000 a coin. So, they were they're proud of themselves for 4 times return. Well, they shouldn't have had 4 times return. They should have had 20x return. How often do you get an opportunity to make 20 times your money in a relatively short period of time? But they didn't do that. They bought it at 5,000, they sold it at 20,000, and they felt good about it. Well, there's a lot of that going on now as well, where people are like, well, heck, I bought it at 67,000 and I sold it at 97,000, so I'm a genius. It's like, you're not a genius. You just sold the world's best asset for something else. If you sold it for US dollars, then you literally sold it for a melting ice cube. And if you sold it for any other asset, well, that other asset is not as scarce and secure and doesn't have all the properties of Bitcoin that will make it the future monetary system of the world. So why would you exchange something more valuable for something less valuable? So there's a lot of that rotation going on right now. So institutional investors have very sophisticated models. So they go in there, they look at Bitcoin and they say, okay, the price right now is $95,000. They run a bunch of calculations and they figure out that if they set a buy at, let's call it $94,000, 300, like $700 less than it is today, then there's like a 97.2% chance that their order will get triggered within the next 26 hours. And then they run a bunch of mathematical calculations and determine that that's an optimal blend for them and blah, blah, blah. And then ultimately, as the price starts to fall, because retail investors are bored and selling, it hits their buy orders at those price points. And so that is the way that Wall Street acquires Bitcoin without pushing the price up. It's also the way Michael Saylor with MicroStrategy, which is the company changed its name to just the word strategy, which I personally don't like, but that's fine, whatever. If they're gonna change their name to Strategy, it ought to at least be Strategy Bank or something like that, instead of just the word strategy. It's so generic, you don't even know who anybody's talking about. But anyway, Michael Saylor at MicroStrategy, that is the way they do all their buys. They set all of their buy orders at a price right under where the current market price is, and then they just wait for people to get bored, and then they let the price come to them. As the price comes to them, they lap up that Bitcoin, like an animal, and the people who sold to them lose. Now, the amazing thing is, with as bored as the average retail investor is, the price keeps not going below the mid 90,000s. And the reason for that is every time it starts to go down, there's all these buy orders from exchange traded funds and institutional investors and companies and all that sort of stuff that's just buying it up. It's buying it up so that, they're not pushing the price up, which makes it more expensive for them to buy. But they're not letting the price fall either because they want that Bitcoin. Now, is there anything nefarious about this approach? No, it's just the way sophisticated people buy things. I do not recommend anybody, retail investors, buy Bitcoin that way. And the answer is because you don't have a bunch of sophisticated models telling you the, probability that the price of Bitcoin on any given day in a certain time frame is likely to hit any specific trigger. And so what people try to guess the market do is they always screw it up. They always like, well, I'll buy more at $92,000. And then it never touches $92,000. And if they had a big sophisticated model, they would have found out that the probability of Bitcoin dropping from 95 to 92 is much lower probability than they thought. So anyway, people who try to do that individually almost always screw it up, and I do not recommend it because everybody cheats themselves out of Bitcoin by doing that. But if you're a big sophisticated investment company that knows how to acquire Bitcoin, you can run all of those models, and it will tell you the probability that your order will get triggered at each price point, how long you'll have to wait for your order to be triggered, the probability that your order will never get triggered and you'll get left behind. And they can run all of that math, and they can put in a bunch of different bets that give them the highest probable chance of acquiring the Bitcoin for slightly less than the current price, which means their buy orders do not push the price up because they wait for the market to start dropping toward them, and then they buy that sell pressure. So it's totally normal. That's what smart people do. That is not what I do because I don't have all those big sophisticated models, and neither do you, and neither does almost anybody. And even the people who do usually screw it up and do it wrong. So I do not recommend people buy Bitcoin that way. But if you have a lot of money to deploy and you don't want to move the Bitcoin price, you can buy it that way on the open market, or you can buy it on over-the-counter OTC desks. OTC desks are people who buy Bitcoin and sell Bitcoin, but they don't do it on the open market because they don't want to move the price. And so essentially, it's a way to move Bitcoin, buy and sell Bitcoin in a way that is not reflected in the order book, is what it's called on Coinbase. So it's like me and some random person meeting at a coffee shop, and I swap them Bitcoin for US dollars. That transaction is not going to show up on Coinbase, but the Bitcoin does change hands. So sophisticated investors also use that. They're called OTC desks, over the counter, because the transactions they are doing are, or at least in the old days, were over the counter rather than being done on the trading floor. But anyway, so there's a lot of buying and selling happens that way. But regardless, the institutions have done a very good job of not pushing the price up and continuing to allow the retail average investors to sell their Bitcoin to the institutions. So what is the solution for that? The answer is, well, if you're an average retail investor, stop doing that. Like, you're going to lose in the long term. The image I posted from River right before I recorded this video, so go look at my Facebook page and you'll see that, shows how much Bitcoin has been accumulated by hedge funds, sovereign wealth funds, businesses, etc. And on the flip side, how much less Bitcoin is held by individuals and retail investors, average people. So go look at that graph and you'll see how much Bitcoin has shifted from the right side of that graph, which is average individuals. It's about if I remember right, something like 500,000 Bitcoin, which is like $50 billion. So something like $50 billion last year in 2024 changed hands from retail investors to institutions and businesses, which is a huge shame, again, because Bitcoin is the one opportunity for retail investors to front run Wall Street, to benefit better than sovereign wealth funds, family offices, Wall Street investment firms. Like, this was everybody's shot. And then some people are just dumbly selling their Bitcoin to Wall Street. So anytime the price is stuck, like it feels right now, it's one of the lowest volatility times of Bitcoin, you can rest assured that it's not because Bitcoin's not doing anything. There's a huge amount of trading volume. It's just the trading volume is Bitcoin changing hands from dumb people who are selling it to smart people who are buying it. And then when eventually they run out of people that are willing to sell their Bitcoin, they will still have that Bitcoin buying appetite, which will then push the price a lot higher. And when that happens, it will benefit the people who own the Bitcoin. And if that Bitcoin is held by by institutions, sovereign wealth funds, and all of that, they will get the benefit of that price increase in Bitcoin. And the people who will not get the benefit of that price increase in Bitcoin is all the retail average investors who were dumb enough to sell their Bitcoin to Wall Street before the price went up. So if retail investors would stop doing that, the price would go up and they would benefit. If they keep doing that, then the price will not go up for at least some period of time until that selling pressure, basically until Wall Street cleans out the average retail investor from as much Bitcoin as they're willing to part with in the mid 90,000s, at which the price will go up, and it will benefit the people who bought it and not the people who sold it, which is how that works. So anyway, the easy answer here is give it time. The people who are dumb enough to sell their Bitcoin, the marketplace will run out of those people eventually, at which point the additional buying pressure will push the price higher, because supply and demand dictates that that is always what has to happen. And anyway, in the meantime, the losers will be the people who got bored. So when the price action is boring, the smart people are buying it. When the price action is boring, the dumb people are selling it. So the best time to buy any asset is when it's boring or when everyone's scared. Right now it's boring. And, so, which also means it's a great time to buy. So if you're looking to buy Bitcoin, you can buy it on sale right now for the mid $90,000. You're buying it off of bored people that don't understand the asset they hold and don't realize how much they are going to miss out in the future by selling this asset for $95,000. You, meanwhile, can pick up this asset for $95,000, which one day will look insanely, extraordinarily cheap. So how much longer will this sort of sideways chop, where it's called range bound or sideways chop or whatever you want to call it? Trading sideways is another term people use. How long will this last? The answer is, I don't know. As long as people are dumb enough to sell their Bitcoin to Wall Street, they will keep buying it in the mid 90,000s. As soon as people stop being dumb enough to sell their Bitcoin in the mid 90,000s, then Wall Street will have to buy their Bitcoin by pushing the price up. The only way they will be able to shake loose additional Bitcoin to buy will be to bid at a price higher than the mid 90,000s. And when that happens, the price goes up. So anyway, here we are, and Wall Street is winning right now because they're acquiring more of the Bitcoin from the bored average people who don't understand what they hold. They haven't done the work to understand its value. And as a result of that, they are selling their Bitcoin to Wall Street, and Wall Street is benefiting. So also the other big news this week was one of the biggest, either the biggest or one of the biggest sovereign wealth funds in the entire world is in the United Arab Emirates, UAE, and I believe Abu Dhabi. I'm not sure exactly where. Anyway, but the short take is they announced that they had bought $500 million of Bitcoin. I think it was via one of the Bitcoin ETFs, but it doesn't matter regardless. So the short take is the largest sovereign wealth funds in the world are buying Bitcoin. And they are buying Bitcoin, avoiding pushing the price up by letting the market come to them over and over and over and over. And retail investors keep being dumb enough to sell the Bitcoin, to sell the Bitcoin, to sell more Bitcoin, to sell more Bitcoin. And meanwhile, Middle Eastern sovereign wealth funds, companies, everybody's buying Bitcoin except the average people that are dumb enough to sell it. Those are about the only people that are not buying Bitcoin right now. So that imbalance will eventually end. I just hope as much Bitcoin as possible is held by average people when that happens, rather than them having pawned off all their Bitcoin to Wall Street. And then here we are again with Wall Street owning all the value. So please don't do that. And it's a great time to buy Bitcoin because it's on sale right now and it won't always be. So have a great time, everyone. Thanks.